Today we're going to hear from Baskal Korkis, who's the newest partner for CSQ Properties. He does all his investments in St. Petersburg, Tampa, and he's the expert over there. He owns several different businesses, and we're going to learn a lot about what he has to say. All right, Baskal, thanks so much for hopping on the show here. Really appreciate talking to you. Thank you.
Great being here.
So I wanted to dive a little bit into your background because there's not many partners that CSQ chooses to partner with, but you're one of the few. So really excited to be partnering with you on some future projects. And I wanted to give my investors and my listeners an opportunity to get to know you a bit better. I've known you for the last couple of years through the real estate guys. We're both in the same mastermind group, the Inner Circle, which has been amazing. But you have a lot of stuff going on. And so I wanted to get into it a little bit, and maybe we could start in the beginning and kind of find out when you first got into real estate and what made you want to do it.
So it's kind of I fell into it. It was funny. So I fell in love with real estate when I was around 14, and it was my uncle was explaining to me about how he was buying all of these condos and renting them out. And that was like a aha moment. Like, it was shocking to me that a person could own property. That was a first shock. And then the other part of it was where the government, Fannie Freddie, basically provided most of the money. So the government gave you most of the money, and then you let someone else borrow it, but you kept all of the upside and the appreciation, and you made the spread on the rent. That was a shocker to me, because at that point in time, I was working, and I've been working since I was 8, but I was 14. I was still working, saving my money, collecting Pokemon cards, trading them, selling them, and I was making good money. And I was trading my way up to higher quality cards, and it just bothered me that I would sell things to be able to acquire more. So the idea that someone would, one, pay me to borrow what I owned, and then two, I would be able to get lending at 80% of the purchase price was amazing. So that changed my whole life.
All right. And then what happened after there? So you're working with your uncle or learning about real estate from your uncle. You're selling Pokemon cards. What what was the next step?
So at that point, I go and I help him with his projects. I then find other guys that my dad knew that were large real estate investors, and I would help them. I would work with his friends, his buddies at floor contractors, some were electricians, roofers, anybody that was in the real estate space, I went and talked to. I talked to people who had property management companies. I talked to credit cleaners. I talked to lenders. I talked to tax specialists, because I wanted to learn every single part of the real estate business to be able to accomplish this. I said, I want to accomplish this goal. I want to own real estate. Let me learn everything I have to learn, so there is nothing that's going to keep me from being able to do this. Because every time I spoke with someone, the naysayers would be like, well, you can't do this because of this. And the second I heard, well, because of financing or because of taxes or because of tenants, bad tenants or whatever, I went into a specialist that did very well. And I said, try to learn from them. What did they know? Mm-hmm. So now I can understand, okay, well, I need to make sure my taxes look like this so I can be approved for a loan. I went to the lenders to figure out what do they want to see to be able to approve loans. I went to figure out what do the property managers want as a tenant. So I went and learned construction to understand what does a construction need to look like to be good. So all of these things I learned when I was younger, and finally, by the time I was 19, I was able to buy my first duplex.
Cool. And that was in Tampa?
That was in Clearwater.
Okay.
Yeah.
Because you've been there your whole life, right? That's where all your investments have been.
I've been in Tampa since I was 11, so I've been here for most of my life. Yeah,
Okay.
Prior to that, I grew up in New Jersey.
Okay, yeah. I mean, one of the things I love about working with you is St. Petersburg, Tampa area better than anybody. I mean, you've done so many investments there, and when we've driven through the neighborhoods, you're like, yeah, I own that property, I own that property, I own this one. that was one I sold, and it's my regret that I sold the property. I remember you mentioned that, but I mean, you own dozens of properties out there, mostly buy and holds. But you just know the area like the back of your hand, which I find very, very valuable for a guy like me. I'm in LA, and to have somebody like you who's the boots on the ground in an area that I want to invest in is really, really valuable. So thanks for doing that.
Oh, thank you.
So question a little bit more about your background. So we're both entrepreneurs. I've either started or helped run 6 different businesses. You, I think, still run 6 businesses all at the same time. You run more businesses than anybody I know. So I wanted to talk a little bit about your different businesses and why you still own them and run them, and how that kind of all fits into Baskal's world.
So when I started, I bought my first duplex, and I was working for the bank initially as a teller, and then I worked up to be a personal banker. After a number of years, by the time I was 23, I had 23 units. So I was working for the bank. I was thinking the best thing would get a finance degree. So I ended up getting a finance degree, minor in mathematics. I decided I didn't like banking, but I like numbers. So I decided to go into accounting. So then I got an accounting degree, minor in economics and international business. So I have these business degrees and I love numbers. So after I had the 23 units, I went out on my own, and I was at that time doing taxes. So eventually I opened up my own accounting firm where I specialized in real estate investors, high net worth individuals, business owners. Um, so that was the way I was bringing money to my own deals. Because at that time, I didn't take an investor on until 2019. So everything I accumulated, I needed to earn the money, or I needed to force the appreciation in my property to create enough equity that I could cash out and buy another property. So everything was organic growth, no seed investments. Even my first property was my own money. I didn't take an outside investor. So that was a necessity to be able to have the flexibility to work for myself. And obviously, when you have an accounting firm, you make your own hours. So from that, I built a lot of efficiencies. And in the tax world, you're only really busy during their seasons. You have a lot of off time. So along the way, I opened up an insurance agency because it was a great product to offer to my clients. So we offered taxes and insurance, home, auto, general liability. From there, we were doing the hardest parts of the job. I decided, okay, we might as well offer mortgages because I was doing mortgages at the bank. So we offer all the financial services for what a real estate investor would need, and for myself when I'm going through an acquisition. So I did it all for my own need and my own benefit. And then at that point, I decided, well, why don't I offer to other people and really kind of grow and just let other investors come along and get the benefits of what I've set up. Because I opened up the insurance agency because I was going through another agent and they were just really giving me bad service, bad pricing. And I'm like, okay, if they're this bad and they're that large, I should be able to do better, you know?
Yeah.
So, and that's how that went about and the natural progression of that. So today, we have the accounting firm, insurance agency, the mortgage company. And then on the real estate side, we have the property management company, we have the maintenance, and we have the investment company. Because from what I've learned is when I reviewed all of my clients' investments, I realized that my investments were almost triple what they were making. Because when you look at a 1 to 4 family investor, the way they calculate their return is in such a way where it seems like they're making a lot of money. But then when I price everything in and then I compare it to one of the investments that we make that you don't have to do any work at all, it ends up showing them that they're making actually 3 times as much money because we're better at selecting the location. We're getting deals other people aren't getting, and we have efficiencies of scale because of our management systems. So at the end of the day, it works out better for everybody to just work together as a team and to get things done more efficiently. So that's kind of from that birthed the investment company, which is what me and you are doing today.
Let's talk a little bit about Core, because that's kind of where you're at now, and that's kind of the newest growth, I guess, in your business area. Maybe tell us a little bit about what Core is doing and why you created Core and what's next for it.
So the funny part is, even though Core is the newest, say, company that is publicly visible, Core has always been in existence in what it does. I've always been a real estate investor, and everything else I did around the real estate investment was to be able to bring me the best returns I can on the real estate deal. I went and got a finance degree and worked for the bank because I wanted to be able to do real estate deals. Everything else was accounting, was to be able to know how to do the taxes properly so we could get the best funding available to do more deals. Insurance was to keep the NOI low enough so we're creating good profit, but at the same time getting good coverage to make sure if there's a claim. Property management, construction, everything was all about Core, making it provide the most profitable deals for myself. So now I gave it a name. The name is Core because I invest in the core items. You have to do your taxes. You have to get insurance. Most real estate investors have to get a mortgage. If you notice what I'm doing, I'm focusing on the things that are the needs, not the wants. So with Core is we're investing in the core items. And we're also, what I see is the trend is that the downtown core in this country, all the different downtown cores are going to be the most profitable. They're going to have the most upside. They're going to have the most consistency in rents. These are my predictions. So we're investing in the core businesses, core items. We're doing rental properties. You have to live somewhere. We're doing industrial because you have to have space for your business. So that is what Core is about, is investing in the needs of people for consistency of income and growth.
Cool. Yeah, that makes a lot of sense. And I love the name, Core. It makes a lot more sense now that I'm hearing how everything's built around it. Is my math right that that's 5 different businesses?
I've lost track. So
Well, I think it's five that you can think of off the top of your head.
yeah, it seems to feel like I'm an engineer as well because of all the drawings I have to go through. You know, but
Well,
I'll leave that to you.
yeah, I'll help you out with that side of things. So okay, so you've been investing in the St. Petersburg, Tampa area for over 20 years now,
Yeah.
primarily as an investor operator. Now we're filming this in the fall of 2022, a lot of uncertain times right now. Where do you see real estate headed for that area, St. Petersburg and Tampa area?
So if we look at macroeconomics, right? If you look at the big picture, anything in a 1 year period of time has huge ups and downs. So I don't look at investing like the stock market and such. I look at it as wealth. What I'm going to pass around to my kids, what is going to be good today that I know is going to be good in long-term period, right? So we all see over the last 100 years, real estate's done well. And through any 10-year period of time, real estate's done well, especially if you partner it with debt, good debt. So when we're looking at the real estate market, it's overall, that's why I like investing. It's a good investment overall. Now, if we look at Florida, Texas, and Arizona, they have a significant net migration rate, like a positive migration rate. They have what's called the silver tsunami, which is all the baby boomers retiring. That is a massive amount of movement that's going to be coming to tax-free states that are warm, that have great medical in place. That's Florida, Texas, and Arizona. Now, if we're making these moves, I'm trying to then, since I'm confident in my own investment philosophy that it's going to be successful in Florida. The next investment I think is where can I put my money that has the highest return possibility compared to anywhere else? And that's where I came to the opinion that it's going to be downtown core. And specifically why I like the Tampa market is because we're some of the most dense counties in the state. When my father first moved here from New Jersey back in early 90s, he bought in this county that was still growing. Well, it's now been almost 30 years, and that county is still almost about to explode, almost about to grow. 30 years later, it's been flat.
Wow.
It's had some upside, but nothing to be significant. Now, what you do notice is, for to say example, New York City. New York City, oh, it's so dense. Even in the 80s, it was extremely packed, but it's still growing. So the places that have demand continue to have more demand. So my goal is to buy in the highest demand, most desirable downtown core areas that are going to have the least amount of land options to have the highest likelihood, in my opinion, upside in growth because of the lack of supply, but still affordable compared to nationally what the costs are.
Yeah. Yeah, and that's one of the things that I've heard you talk a lot about, which I really agree with, is highest and best use of the money, the investment money. And you're pretty like agnostic when it comes to product type, well, within real estate. You're always saying, I got to find the highest and best use of the money. And I really appreciate that because you get creative about, okay, what types of properties am I going to be looking for? What's my exit strategy for these properties? And then also most recently is with getting creative with debt. I've heard you starting to get creative with debt because we have a lot of uncertain times right now with what the federal interest rate's doing. And so I was hoping maybe we could talk a little bit about the creativity that you bring to the real estate and the highest and best use of investor money.
So one of the things that really differentiates me from more of the public figure real estate investors, so a lot of the public figure real estate investors, I don't consider them really real estate investors. They're more finance guys that invest in real estate. The people I learn from are actual real estate guys. They show up in khakis to the job site every day in the pickup truck, even though they're worth $100 million plus. They would show up every day. So because their business and their family business was real estate. So I learned it from them, not from the finance guys. They're trying to take the stock market and recreate it in the finance world. So my approach is from the old school way of doing things. So back in the 80s, a significant amount of transactions were owner financing. So I have experience in that side of the business where if I'm talking to an investor that's selling a $10 million property, and today most deals won't work unless you're putting down 50%. That's going to be really hard to produce a good cash on cash and a good IRR if you're putting down 50% on a 6.5 cap property. Now, what I've been doing is getting creative with the owners with doing carryback on a portion of the loan at a very conservative interest rate to increase our profitability. Mix that in with improving the operations of the business, increasing the rents. One of the things we're doing with the industrial park that I don't know if you know this, is that we had 1/3 of the land changed to agricultural. So the property taxes were going to become $150,000 under the new ownership. Well, now they're only going to be $100,000 because 1/3 is going to be considered agricultural. So not sitting at $50,000 a year. So what we do is we look in all the nooks and crannies to try to say, what can we do to improve the cash flow model to give us the returns we're looking for as we're holding this property and waiting for the right time to redevelop the industrial park into something even greater.
Yeah, I love it. I love it. And I know, we're going to be employing some of these approaches with the Tampa Bay Growth Fund, which we're launching. We've done quite a bit of work on that. We can dive into that into another webinar. But I know we're getting creative on some of the financing to acquire properties and still give really good returns to investors. So that's super exciting to be a part of.
And the locations are amazing. That's what I'm really excited about. It's not the most people are excited about the building or the property or the asset. Investing in the core of it. I'm investing in the dirt. I'm trying to
Sure.
get the best quality dirt, meaning the best quality location that gives us the most potential with upside. That is really what's exciting because there's just so much upside with these properties that we're looking at over the long term. As the story I've told you before, I bought a fourplex for $184,000. It was in December of 2013. And people were telling me that that wasn't a great idea. I could buy four houses for $184,000 back in 2013 in this other area for the same amount of money. Well, I said, no, I think this is going to be a better location. It's going to be better over time. Fast forward to December 2021, a fourplex down the street from me sold for 1.9 million. And the rents I'm generating, if I chose to do the highest and best use of that fourplex, I'd probably bring in 12, 15,000 a month in rent. And those other properties, they did well. They went from about 200,000 to 800,000, and they went from probably around $2,000 a month in total rent to maybe around $6,000 a month in total rent. So they still did well, but that wasn't the highest and best use.
Yeah.
Now, obviously, the previous history in that example doesn't mean every deal we're going to do is going to be that good, right? Things happen that are unforeseen. But my goal is to try to do something similar where we're putting ourselves in with the probability of having such a big bump up. So that's what the goal is, trying to put ourselves in the position to have the highest chance of that. Investing in a whole bunch of duplexes in a neighborhood, you can't demo those duplexes and develop it to anything better.
Yeah.
They're at highest and best use. The only thing you could do is increase rent. That's only one way of winning. I try to have multiple exits of how can we win and make money from this property.
Yeah. I love it. So since you've been investing in this area for such a long time and built up a name for yourself within the brokerage community, are you getting a lot of brokers that just come to you directly and say, "Hey, Baskal, I got a property coming up," and kind of offer you the off market deals before they hit the market? How does that work for you?
A lot of the older ones, yes. The ones that have been around have a track record, yes. But a lot of the newer ones, I'll reach out to them the first day it hits the market, and then they'll know of me. So then they'll get me in the front of the line. So
Got
the
it.
medical office that I was discussing with you, I think it was yesterday. There was, I think, 3 or 4 people that bid on the property,
Yeah.
and my bid won out over an all cash bid, and I have financing. I have financing on my deal, which historically the cash deal would win.
Yeah.
But I was able to, explain to the seller what I brought to the table, and they chose my deal.
Yeah. Yeah. That's great. So let's talk for a minute about the personal Baskal. You've got 4 young kids, not quite caught up to me yet, but I know you're getting there. Probably in another year or two, you'll probably be caught up with 5 kids. But
Don't tell my wife that. Don't tell my wife. She's we don't like that.
business
She's
that can be happy with me on that one. But no, you got four young kids. You're definitely a very strong family man. How do you find balance between everything that you do work wise versus still being a great dad and a great husband?
I grew up in the business space. My dad had mechanic shop and a gas station when I grew up. He had a convenience store. He worked lots of hours. My mom worked lots of hours. My wife, her family is still in the jewelry business. They worked a lot of hours. They're business owners. So the idea of, say, separation between work and life has never been a separation. Like work and life is one. So when I say take my kids out to the park, I'll take them to the park right by the property I'm looking to acquire, showing them what we do. What does Baba do? Teaching them
Yeah.
what I do. How do we get to live this lifestyle and are comfortable? And because my kids are realizing now, they're like, oh, Baba's rich. Like Baba has money, you know? My son's birthday is today, and he kept
Oh,
showing me
cool.
something. And Zach's turning 6 today. So he kept showing me, he's like, oh, can you buy this? And I was like, why do you think I'm gonna buy this? He's like, you can have the money. I was like, well, that doesn't mean anything. I have the money. That's not your money, you know. Yeah, he's a good boy. He's a very good boy. Um, so they get to understand and see what we do, why we do it, the logic behind it. They always ask me why. So I take them around and I teach them this, and then they also get to go to the park and take them to this, have fun, take them get some food and ice cream. So it becomes an event to see that this is part of what we do and who we are and how we have what we have. This
Yeah.
isn't like, oh, I have to work. They see me going to work and I enjoy working.
Yeah.
I think remember the stories when Nancy came and wanted to partner with me back in 2019. I told her no. I told her that I'm content. I don't need partners. I have enough money.
Yeah.
And after her persistency, about 6 months in, I said yes. And one of the things that gave me the yes was, wouldn't you like to do more deals?
Yeah.
Wouldn't you like to have a larger budget to do greater renovations?
Yeah.
And that was kind of the seed that got into my head to say, okay, it would be nice to be able to go to highest and best use and not worry about my budget. Because if I can get more money and I can do the best for this property and make the highest profit because of that, that's better than me just doing it on my own. So then I decided, okay, I only want to work with good people because I enjoy what I'm doing. I don't want to work with anybody that could make it more difficult and not enjoyable, not fun, because
Yeah.
it's fun taking something that's not beautiful and bringing it back to life and
Yeah.
making it, look beautiful and amazing, and having people in the community be happy that they are there and they have this thing.
Yeah. Yeah, I love it. My 3-year-old boy, I only have one boy, I got 4 girls. His name's Zach. So we've got that connection, if you remember.
Yeah.
It's funny you mentioned about going to the park nearby the properties. So last weekend, I took my daughter out to one of my properties. She's 13 because we had to do some work. I needed her extra hand. I actually worked with my dad, and we're putting up graffiti film in the area that we're in. We need that. And so we did that. She didn't like spending her Saturday doing that, but I taught her a lot. And I even sent her up on the roof, and she had to clean all the gutters. She had to clean the roof drains and clean off some debris from the contractors up there. She's like, why do I have to do this? This is terrible. I'm like, look, if we don't get this out, the rains are coming. It's going to be a lot worse maintenance issues when the rains come. And she's
Yeah.
like, okay, yeah, I kind of got it. She wasn't happy, but she got it. She understood.
Yeah.
And I think it's those little lessons that do become life lessons. Like, hey, you got to prepare before the rains come, right? The rains can be anything, but you got to prepare. You got
Yeah.
to be willing to put in the work to get it done. I told her, I said, hey, this graffiti film, I had a quote for $2,000 to do the graffiti film. I'm like, I'm not going to pay $2,000. So I bought the film. Me, my dad, and her, we did it together. We got to spend the day, the three of us doing things, and then we went out to lunch, right? And so it was a good way to spend time together. Kept her off the phone, off the TV, and she learned a little bit about real estate. So I love that you do that with your kids. I'm very much the same way. I know it is always a bit of a struggle to find the balance between work and family, especially for us that, we work a lot, but we love what we do. So that makes it a little easier. So I was just curious to hear your take on that. But what do
Yeah,
you do?
I
What do you
saw on
do?
Instagram. I saw the picture on Instagram. It was cute.
Oh, yeah, 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 yeah.
I
She was
still
not
follow
happy,
Jack
but
on follow Jack on Instagram.
yeah. What do you do for you? Like, how do you manage stress yourself and kind of stay level headed with so much going on? What do you do for yourself?
So I'm very blessed. I was heavy set when I was younger, and then I got into fitness and I got into weightlifting. Then I started powerlifting, and that was naturally kind of good at it. And then when I was in my early 20s, I was in college. I went to the state championships, and I ended up meeting Tony Conyers. He's like the world champion in powerlifting for every year for the last 40 years. The guy's amazing. He's 64 and he's still powerlifting and still winning of out
Wow.
of all age classes too, not just out of he's a phenom. So super great guy. Met him in Miami, found out that he works out in Tampa. So I've been working out with them since I was 20, off and on, and we've been pretty consistent the last say 4 years, 3 years. And it's a Christian group. We pray at the end of our workout. There's a lot of good bonding and good fellowship, and work yourself out physically, you work yourself out spiritually. It's a good it's a place where I can go and uh, exercise myself, blow off steam, talk about everything that's going on. Because even without the business, life has a lot of struggles, and you need to have a good group of people around you that you can talk to, and that's going to be encouraging and supportive and give you good ideas on how to uh, deal with life's challenges and grow as an individual. So I was really blessed to have that person, those people, right? The whole team's awesome in my life. And actually, my assistant Evelyn, I met her because she's part of the team.
Cool.
Yeah, so to have that type of like Christian group can that you can work out with and grow with, and now a lot of our people that are in my office and are close to me are like really good believers that are supportive. So it helps to um, deal with everything when you have such a great team
Yeah.
uh, around you. So that's kind of what I do, and my hobby, is powerlifting.
Cool. Yeah. I'm a recovering endurance athlete myself, so I get it. I love working out. Really helps clear my head, so I can totally understand where you're coming with that. I'm the same way.
Awesome.
Um, yeah. So all right. So last question here on going back to some business stuff. What kind of advice would you give to an investor who's looking at real estate and looking at doing some investing in some really uncertain times right now? What kind of advice would you have for somebody like that?
So when times are really good, people go and they invest in low income neighborhoods and they invest in the rural areas because the really good areas margins get compressed. And what you find out is when times get tough, the low income area suffers really bad. The properties out in the rural areas suffer bad as well because there's not enough, money going on in the economy. So what I realized from years of experience is that you always want to buy the highest quality asset for the majority of your book, right? If you're a stock investor, they say the majority of your book should be blue chip assets, and then you have some that are on like the riskier things. So what we look for is buying blue chip assets in highly desirable areas. So we're buying quality stuff. Now, when times are good or times are bad in the stock market, you can buy a share of Apple. Unless you're a whale, you're not going to get preferred stock. You're going to get just the standard stock off of, the apps. With real estate, it's different. if there's a piece of real estate, and you know this in LA, same thing in Tampa, there's a piece of real estate that's really high quality. One family owns it for 20 to 30 to 50 years, and it's not going to come up again for sale. It doesn't matter what year it is. This is your shot to buy it. Now, if the economy is going down, you have a good chance of buying it at a discount. At the more turbulence that's happening in the market, the better it usually is for a real estate investor, a true real estate investor, because all of the opportunities that normally never come up for sale come up. So if you're only trying to buy when times are simple and good and calm, it's very hard for you to get the highest quality asset or the most rare find. All the rare finds come in the rough times. So that's why, like in the last meeting we had, I was excited about what's coming, because all of the things that you normally never get to buy are going to be able to come up available for sale and at a reasonable price.
Yeah.
And the other part of it is now everyone's scared because the debt's so high. Well, it's high in comparison to it was 2 years ago, but it isn't high in comparison to how it was, say, back in 2006, 2005. When I was buying back then, rates for investment properties were 6 to 8%, 9%. So it's not that high. It's really the debt is in comparison to what your cash flow is going to be. So if you can make your cash flow stronger, then the debt's not a big deal. And the last thing to remember is when the debt's high, most people get out. Well, when they get out, that gives you more opportunity. And then if the debt goes down, rates come back down, you already have the quality asset and you refinance to a lower rate. But if you wait until the rates are 4 and then try to buy the asset, it's probably going to be twice as expensive as it is today. So you can't basically you can have your cake, but you can't eat, or you're not,
have your cake and eat it too.
Yeah. My argument is you can have your cake and eat it too, but bake a second one. So how do we do that? Is we buy the asset with higher interest rates. And then, God willing, my thing is most likely in 4 years, the rates are going to come back down. 5 years, the rates are going to come back down. So if we hold it for a 5-year note, at that point, rates, in my opinion, should be lower. So right now they're going to go up and then come back down. At that point, we refinance and we secured the asset we got the lower rate and we bought it at a great price then, and we're keeping that margin. And the longer you wait, and this is what I've been seeing, the longer you wait, the bigger your spread is on your deal. So you just have to buy a high quality asset when you have the opportunity and hold it long-term, refinance when rates get lower, and you make that margin. You keep that profit.
Yeah. I love the theory that you're marrying the property, but you're dating the debt, right? You swap the debt out. And I totally agree 100%. I'm super bullish right now and very active buying properties. And you're right, we're getting retrades, we're getting discounts on deals right now because the debt's high, but the debt's not permanent. So if you get the right debt that you put on the property, like, and you mentioned it earlier, you said buying properties with good debt, right? That's the key. You got to have debt that is in line with the business plan for the property. Pay the high debt now, that's fine. Historically, we're actually not high debt, right? But as you mentioned, but anyways, relatively buy the high debt now. The property is a little bit lower, and then refinance the debt later, and you've got a great property. So I agree 100%. I'm on board with you there.
And the last thing is this: the news is here to either excite or make you fear. So when you're hearing the news saying prices are going down, they're referring to the properties that are listed so high that no one was going to buy them anyway. For example, the properties we've been buying, the neighborhood we've been buying in, still to today, they're being sold within the first week. All the good deals are sold within the first week. Anything that is I've looked at day one and I'm like, whoa, they're crazy. Yeah, that property is still for sale 3 months later because they were crazy day one.
Yeah.
But anything reasonable is being sold immediately. So as you've seen, like the one property we looked at yesterday, we're buying it for 900, and I think that the dirt alone is worth 1.8 million, $2 million. And we're buying the property for 900 with a medical office on it. Another property was a 5-plex. We bought it for, I think, 600. The appraisal came at 1.4.
Yeah.
So, okay, how are you going to go wrong? We bought it for 600 and appraisal came in at 1.4. So these are some steals. And they're awesome. They're not always that easily found, but when they're found, we need to jump on them.
Oh, yeah.
And that's really what the opportunities are coming to, that you have to just pick them out when you can.
Yeah, I love it. Cool. Well, this has been super helpful. Thanks for sharing with us a bit about yourself and KOR. What's the best way for people to get a hold of you or follow you if they're interested?
So at Baskal Korkis on YouTube, at Baskal Korkis on Instagram. I show people what I'm doing. I talk about the markets, the financial markets, implications, economics, real estate, why we buy certain deals. So as I'm doing it, I just educate. And then I'll give you an email address in case anyone needs to email us. But, our website is KORCF.com. Also, our other website is taxsmartinvestor.com.
Okay. Awesome. Yeah, we'll put those in the show notes. And again, Baskal, thanks so much for sharing with us. Keep up the good work. And CSQ is looking forward to partnering with you.
Thank you for having me. Have a great day.
All right. You've heard straight from the guy who's been investing in St. Petersburg, Tampa area for over 20 years and has 5 different businesses to make his KOR work. Hope you enjoyed the show.